Warning, it's happening again right before your very eyes, and the charts are about to shock the world as the same exact repeatable pattern that signaled the 2021 cycle top before we broke down for a 2022 bear market is returning with bone-chilling precision. And most traders are completely blind to the quicksand we just stepped into because this is the ultimate moment to stop the BS and focus on the cold, hard data. Not only did we see the exact same broadening megaphone pattern that fueled the last major plummet, but the exact same signals are flashing now. As you can see, in 2022, we built a long, strong base for about 100 days before experiencing a bull trap, broke down hard, struggled for a retrace, and this is exactly where we are in the current cycle pattern before breaking down and puking for new lows. In similar fashion, we based out, bull trap, broke down, struggling to maintain a range and a retrace, and it's extremely likely we are going to puke for new lows in 2026. And many crypto investors believe what we are seeing is a massive de-risking event where big institutions like BlackRock are quietly exiting their spot positions because they and their clients are not willing to carry the volatility of crypto anymore. Personally, I believe that these institutional players are shorting the markets through perpetual futures and derivatives markets in order to buy the dips at lower lows. But the reality is that the charts are telling us the truth. Each one of our strongest supports on both Bitcoin, XRP, and even Ethereum have broken down and turned into a ceiling of resistance. And if you don't understand how to read the charts and how to read volume and how to see all this stuff, then you're trading on pure hope. We've seen this move before in 2018. We've seen this move in 2022. And every single time people ignored these bull trap warnings, they watched their portfolios dump 70+% in the new downtrend. So stay locked into the video because this is a very valuable private call I hosted for our students at Altcoin Pro University who took advantage of the most recent move to the downside. And not only do they get to hop on these live calls, but they get to ask their questions as well as we analyze the markets together. But in this video, I'll be breaking down the exact levels where this market pukes even further so you can catch the over leveraged investors off guard and actually profit from it. You'll walk away with the exact bear market blueprint and the specific confirmation candles that prove whether your favorite altcoin is going to recover or fall into a deeper free fall. The information I cover in this video will give you clarity you need to protect your capital and finally start trading like the whales who actually move these markets. Now, before we dive into the charts, be sure to check out I Trust Capital. You can find the link in our description below, and when you do it through our specific link, you can claim a $100 funding bonus when you start an IRA or a Roth IRA account through them. Not only do they have extremely low fees, but you can buy and sell both crypto and precious metals like silver and gold. They offer everything from real-world asset tokens, layer 1 blockchains, your majors like Bitcoin, Ethereum, XRP, AI tokens, infrastructure tokens, and they're always adding to their list. Your account is completely self-managed, which is why so many people trust them with over 200K accounts and 16 billion in transactions. So be sure to check that link in the description below to get started today. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. And again, the biggest bulls aren't certain why we're dropping. Now, my personal theory is that the crypto market now is acting like a leading indicator for the rest of the market. In other words, the stock market is lagging, and essentially what's going to happen, in my opinion, now this is a theory, we'll see how it plays out over the next 3-4 months as we get into May, right? That traditional sell in May and look away month. But you know, it could be different this time. In the past, more often than not, we would rally in the crypto market from December. Honestly, December is usually where we were putting in tops, if not by April. So into those months. But now we've seen some extremely weak months, and I'm going to show you something on the chart that's honestly going to kind of shock you how similar this current market environment is relative to the 2021 cycle top. This is something that I covered with the altcoin pro team. It's starting to show up in almost textbook on the charts, which leads me to believe we're likely going lower. And what kind of would he have me more cautious now than ever before, at least in terms of longing the market or tossing a huge clip at the market, is the fact that the stock market's still relatively close to all-time highs. So, we've got a lot of people that are kind of confused. We could cover a few of these. Like, I think Novogratz was saying something. There was no smoking gun. I kind of agree. Like, there's no one reason that the crypto market has. There's been no major collapse in, market trust because of some Sam Bankman-Fried FTX event. So, in other words, we're beginning to realize that the whole market, the greater market, the biggest investors, the ones who actually have money and can move a market, and this is just a conglomerate, it's not one individual, it's not one institution, are not willing to carry the risk of a crypto. Why? Because they're just more volatile, right? In an environment where they're uncertain, that's going to be one of the first assets in their portfolio that they sell, which is what has caused those lower lows that we've seen. You could argue it was a major deleveraging, but the last dump that we saw, let me go over to like Bitcoin here, on XRP, Bitcoin, Ethereum, everything, Solana, from basically their local highs of like 93 and even right here at 86 down to a low of 59.9. You'll notice that on this day, we did get a lot of long liquidations. We got some liquidations, but nowhere near the same amount of liquidations if I go to that daily time frame that we got on October 10th. We had far more leverage in the system here. And this was probably kind of the start of that unwind. Now, it's really difficult to know whether or not, you were going to break down. But if there's something you're going to learn, like, because right, we're at a long-term support or intermediate term support here at like 108. Nobody knew, but there's some really smart minds in the space that you could learn from. And one of those people for me was Peter Brandt, showing the fact that we've had kind of this broadening top pattern, right? Whenever you see this megaphone, microphone type pattern here, okay, and you're consistently retesting a support with now a lower high here. He literally said, hey, selling to 114, likely to get a one-to-one move from the top of this range right up here from 122 to 105 to a new low. And it almost played out like textbook. Like, look at the drop from here to here, then down. Once we broke down for what used to be a support becomes a resistance, even on this broadening top. So even if I didn't have that line there, you can see how this played out. Whenever I get this, like more often than not in markets, whenever I get these types of patterns, I tend to stay away or look for an opportunity to short. I rarely long these types of markets. Um, it's just too risky. Any in general, like I'm playing very tight stops on these types of plays. If you don't feel confident and you're in a situation where you're not really experienced yet, this type of a pattern, stay away from. It's that simple. It's an indicator that it's just too volatile. It doesn't want to go in any one direction in particular. Everyone's going to get wrecked. The bulls and the bears on the upside or the downside. But right here is really where this breakdown, in my opinion, you would have had a pretty good confirmation, minus that downward trend right here, which is like your support. This, I don't know what they call it, but I call it a megaphone pattern. There's a lot of names for all these things. It doesn't matter how educated you are on that, as long as you can, start to learn how to look at a chart and then make a decision, right? With good risk management. So that said, right here, this second high right here, breakdown, new lower high, breakdown right here, retouching this range on some weakness would have been a good opportunity. And if you didn't catch the short here, you had another opportunity to short when we got the breakdown on this candle right here for a resistance. What used to be a support becomes a resistance. Can everyone see that pretty simply? I mean, I really try to keep it simple, guys. I know it's harder to see when it's all happening, when the actions going on. But sometimes, it's like you just gotta be patient, wait for the market to come to you, and then make a decision when it comes to you by setting an alert or something. Um, right here, you can see that like between, and we were covering this for quite some time, right? 108 to like 106 seems to be a pretty strong support, which breakdown is going to be a resistance. Here is your what? Highest high, lower high. And more often than not, in crypto especially, I look for some bull traps. Do you see that? Resistance, resistance, breakout for a new high, immediately slam back down heavily on really big volume, by the way. Do you see that volume right there? So not only was it a major deleveraging event, but it was also kind of an indicator that this thing, like, this was it, which gave me in like an indication. Okay, it doesn't mean it's over. There, we could still be in a bull market, but like, ugh, that's not good. That's a really bad sign. It's kind of like, your 80-year-old father, grandfather, starts to develop a really nasty cough. You hear it, and he's like, "Oh, I'm fine, I'm fine." Right? And you're like, "Well, I don't know. That sounded pretty not great. Let's at least get it checked out." No, no, I'm fine. And it's like, well, maybe, and that's the point I'm trying to make. It started giving me some signs. It doesn't mean that it's over. It doesn't mean that they're done. It's got a greater potential of being an actual issue. This right here, this occurrence breakdown for the next day was an immediate indicator on what? Growing or expanding volume. Do you see that? See the little expansion right here? And obviously, even on the sell side, into what? A new low. So now you officially have a new downtrend in a long-term uptrend, right? Here's your high. Here's your next high. Here's the lowest low of the range. Here's the low between those two highs. This low is lower than this low. This high is lower than this high. Okay? Downtrend. Even if you short it here at 98, this is where people got to get patient. They got to trust their gut. They got to have a stop loss that doesn't just get them out the second they get in, or they change their mind. Sometimes you literally got to make your decision, walk away from the chart, be okay to take the little loss. Don't take a big loss. Don't be okay to take a big loss. Be okay to take a small loss. Okay. And then look, we get a bit of a retrace right here, right? You would have been in a negative position for a little while, just some drawdown. 1, 2, 3, 4, basically a week before this guy right here. Notice this didn't even take that much volume. And so sometimes I know I talk about expansion of volume. I know I talk about contraction of volume. I think that's important, but I also think it's important that you guys learn how to look at volume from a daily perspective. Look at how weak this volume was relative to all the other volume here that made the breakdown. Do you see how we had a new higher high here, immediately sold back off, and a major bearish engulfing candle? Where did that occur? At a support that is now what? Likely a resistance. That's a pretty high, in my opinion, that's a really high probability trade. Like it's staring you right in the face, and very weak volume to do it. Bears and bulls weren't fighting much for this position. If anything, the Bears didn't require that much fight in order to make the market drop like that. Does that make sense? It didn't require that much money. So that's an indicator. No, this is a good breakdown. Okay, perfect. You could re-enter a short position right here. Add to your position a little right now, right? If you entered right here, perfect. If you entered here, maybe wait until like a break at 101 so you're not adding risk here in your drawdown. I tend to like to it just depends on where you enter, but I tend to like to add to my position when the market's telling me I'm right, not when I'm wrong. Okay. However, like again, once you start to develop like the intuition, you've done this enough, you can take little plays like this because it's within such a tight range of where you entered to begin with. But for if you're starting out, I think developing the disciplines are extremely important. Knowing what I know and seeing what I'm seeing here, if you didn't have time or didn't take this entry here, this is a great entry right here. Okay. Playing it out, you see, what do we see here? Look at this. Like the candles give you almost everything you need. You don't need many indicators even. Okay. With horizontal supports and resistances, pretty straightforward. Resistance, what? Now, sell off for a new lower low on the wick, back to our range support. And this wick, all the bulls that did step in for this candle couldn't even get the price back up to the range high. This wick came lower than the entire start of this prior body. Okay, so this is just another bearish continuation candle and a third that does the exact same thing. That's a pretty bearish situation. The most bearish thing about this whole situation here is the fact that we broke for a new low and closed. Okay? New lower low, close. If you didn't get out somewhere around here, this is a great place to short. The market gives us so many opportunities. But you know how many people think this way, and I used to think this way as an amateur too. Okay, well, dude, oh my gosh, it's so cheap. I should have shorted up here, but because it's cheap now, maybe I'll just buy it because like it can't possibly go lower. It's already under 100. It hasn't been there all year. Like I just this is weakness, not strength. I don't long into weakness, right? This thing needs some medicine. But first, I want to give it a little strychnine so it dumps a little further. I want to, and so at the end of the day, this right here is a good indicator that there's some serious weakness. We're going for lower lows. And the market really did that. Now, there's a few things that can happen sometimes. Sometimes, right? The market doesn't play nice. And instead of getting this candle right here that you're seeing, the market immediately comes back up into the range. Okay, guess what? If you shorted here, where should your stop be? Either here or just above the high of this candle. You're going to get out anyways. Cool. You were wrong about the timing. You might be right about the direction of the move. You're probably just wrong on the timing. It might need more time. It might be a little bit of a fake out, right? If it comes back into this range here a second time, then I would say, oh, this looks like a textbook bear trap. And now let me long the market here. Pretty straightforward. Like, if you honestly traded like this more often, you probably make money, more money than you lose if you have good risk management. Again, the risk management is extremely important. And this is why I always take a position on that day. This is why, let me remove those drawings. I don't wait for a retrace more often than not. Okay. I'll shorten to weakness like this when I see, okay, we actually do have a confirmed top, another bearish engulfing candle back to the support. I like being a little early sometimes. It's not the best deal, but I like being a little early because if I'm wrong, I'll just set a stop right up here. But if you short here and you're in the move the moment it breaks down, you're already in the money. I don't typically, and here's my point. I don't typically like to wait for the breakdown and a retrace to retest support because sometimes this will occur and you miss the entire move. I don't wait too long. When I see a breakdown, right, I almost always like to take the position right away in the case that something like this occurs. This is where you can make some good money. Because some people might be sitting here, see this, and then they saw this happen where we retrace back to retest, and they're like, oh, I'll wait for the retest. So then they're waiting. Oops. They're waiting for like the breakdown here. Oh, and then it's got to retest 100, right? And it never comes, and the market just pukes because that's real weakness, right? That's deleveraging. That's, the bears piling in with some major short positions, like all of that stuff. So that's the way that I view it. I don't like to wait too long. I'll enter a little bit early or just on the breakdown, but I don't like wait for a retrace ever. And that also includes if I'm in a long spot position, and let's say I entered right here because I thought this was bullish, and it looks bullish, right? I'd look at a few more things, volume, resistance, all that stuff. Just making an argument or a case, okay? So let's say I entered right here, and then the second I enter, the next 3-4 days, I immediately it sells back off, and now we're sitting at 105. And instead of selling into major weakness, my position because I'm like, I'm already wrong. The market's telling me I'm wrong. I hold and wait for what? A retrace so I can break even. Again, foolishness. The moment I'm wrong, I'm wrong. And the reason it's foolish is not because you couldn't be right at some point in time. What dummy hasn't been right in the markets at some point in time? That's how everyone gets hooked. Like that's the point. But the best of the best manage their risk really well. They don't wait for a potential retrace. Nobody knows if that's coming. Nobody knows what's going to happen tomorrow if there's going to be another war, if we get a terrorist attack, if whatever. Like if oil really stops coming out the ground, like we don't know what's going to occur. So for those reasons, you've got to protect against that downside risk or the upside risk if you're shorting. And in this case, you would have been right. The market would have come back in your direction. You would have had an opportunity. But I've noticed more often than not when people do that, the market starts retracing back to their position when they made up their minds that they're going to wait for a retrace because the market came here. The market comes back into their range where they're at a break even. They're like, oh, I'll give it more time. Maybe it'll actually turn around. And the market gave them an opportunity. They still didn't take it to de-risk. And then the market immediately starts dropping again. And then right here, they're kicking themselves in the foot, right, into a downtrend, and they continue to hold out of disbelief. They're kind of paralyzed. I've seen this over. I was this person, right? In the beginning, not knowing better. I didn't have coaches to teach me this. I literally just had to read all the books. And then by trial and error, you learn what happens by watching the charts enough. I had to watch charts enough, see what occurred. By then, you're usually broke and then you have to start over. So it's not worth it. So is everyone getting this? Are people picking this up here? Let me go ahead and X this out. Let's leave. And so right now we got some pretty interesting signals, right? The market's breaking down. There is no one major reason. I don't know who this is. Corey Klippenston said, the chief executive officer of Bitcoin Financial Services, said, I really didn't think that we'd see a six at the beginning of Bitcoin price ever again. So yes, even the biggest and the best managers and fund guys, nobody actually knows. And you could argue maybe one or two people do, the cabal, whoever. I personally just I don't care to believe that, or even if it's true, it doesn't actually matter or serve me. Like I don't make any more money believing that. Does that make sense? And if there was, and I mean this, if there was that cabal, let's just assume that a Larry Fink is in the world, pulling the strings and whatever. Um, I wouldn't trust anything he said anyways. So which means, ready? One thing, I just shut him off. I don't listen to it. And I just watch what the charts are telling me. And then while everyone's screaming bear market, you already knew because the charts are showing you by giving you the weakness, literally pointing the direction that they were going to go in. Right? So that's the way that I think about it. I tend to just shut off all the media and news when it comes to this stuff. Right? Although it's important to know kind of the overall backdrop, it's kind of nice to have a 30,000 foot overview. What's your theory for the future? That is an investment strategy. It's very different than looking at a chart. Okay. At least from the perspective of what I just taught you. So it is important to note that. Let's go ahead and look at now what we're seeing on the chart. Well, let's come over here and just see if there's anything coming up. So I do like to use an economic calendar. There's plenty out there. I just use Bloomberg here and there. And I'll come over here to the filters. I make sure I turn them all off. I just want to look at the United States. I want to look at all of the majors, and I want to look at the three bull symbol. From there, I'll usually toss a couple weeks on, 3 weeks, keep it simple. And then I just want to see, do we have anything coming up that could potentially affect the market majorly? Sometimes, like in certain markets, like non-farm payroll will affect Forex more than crypto. I tend to just focus on CPI, jobs, those types of things. PCE and all this stuff I've noticed doesn't really affect the crypto market is much like manufacturing. If we start to see some major breakdowns in those, I would actually then recognize and notice and be like, oh, maybe there's something going on economically that's going to drive things. But again, take everything you see with a grain of salt. So it doesn't look like we're getting a ton of major deals here. Jobless claims are every single, looks like week, I believe. Yeah. So I'm not really too worried about anything that I'm seeing on this guy. In terms of macro, we'll look at the macro, then we'll come back to the chart so we have a good perspective. I do look at the stock market enough to give me, kind of again, a 30,000 foot view. Okay. So, what are we seeing here? I'm honestly just shocked with the resilience of this stock market. That said, we are starting to see a lot of volatility, a lot of gaps. The bulls continuing to just try to keep the price pushed up, but they're really struggling for new highs. That's the first thing I'm seeing. So even if we came in a new high, the moment we start to break back down below 69, I think I'd want to get out or sell short if I'm talking the stock market, at least the S&P. Okay. You notice these major red candles here. We actually had some signals here early on, right? Before the market continued rallying. But look at what we're continuing to see here. Every single time we see a major sell-off in one of these candles where we bottom out, the market in pre and post immediately buys it right back up. Again, a major breakdown, huge gap down, bought right back up. Huge breakdown, bought right back up. I've seen this stuff before. This is rolling over. Like I pointed to it on a hype. It's easier to see on a 24/7 trading chart because we don't have as many gaps and all that stuff. But here's the thing, guys. Like when you see this type of vol, short for volatility, right? And the market's struggling to print those new highs, even though it wants to, even though people are still greedy and wanting to dump their money. This is an indicator. This is getting closer to the end of a rally in a stage. Whether it's the start to a bear market, I don't know. My theory is the crypto market is a leading indicator. and pointing to the true weakness, while the stock market, people have just not capitulated yet. Why would I capitulate here into new highs? There's still greed in the market, right? Which leads me to believe that because the market's still really high in terms of its prices, when this thing does potentially follow Bitcoin and crypto, it's going to create an even weaker, scarier environment for the crypto market. So there's no reason why I promise you, there's gonna be people that say, oh, Bitcoin couldn't hit 35,000. It really can. Oh, but it's never gone. In the past, I used to say this. I'll tell you where I was completely wrong. Let's go to this chart here. I'm on a weekly scale. In the past, okay, Bitcoin, when it pumped to a new all-time high in 2011, and it rallied for a new all-time high here. This was a technical all-time high before breaking down quite a bit in terms of percentages from that high. And we're on a weekly scale. Look at this, 70, 75, 76%. Someone could argue maybe here. Okay, fine. But I was doing a lot of homework. This was its technical high. This was its next all-time high. Very short-lived, like bear bull type deal. Um, Notice how we never came and retested that prior all-time high, even the wick. So all-time high comes in, breakdown for short-lived bear market, rally for new all-time high, short-lived bear market, rally for new all-time high. Okay, even here. Let's just go from one to the other. Okay, look, breakout for new high, bear market low came in at 32. Prior all-time high was 12. Okay, using that information and data, I assumed if we did retest 19, awesome. That would be the lowest low. But realistically, I was looking at 23 to 25, somewhere in that range for a bear market. For the first time in history, Bitcoin broke below its prior all-time high. Close to the bottom of the bear market, by the way, right? Right here. FTX collapsed right here. Terra Luna collapsed somewhere over here. Okay? So I was wrong for the first time. And I started to realize that models just don't work. Like they work until they don't. All of them. The rainbow chart, your RSI tool, the 4-year cycle pattern, like all those things, they don't work at one point in time. The pi cycle chart didn't work this time. It worked every other cycle until now. So I don't trust theories anymore. I don't trust models anymore. The model is take on less risk, win big, lose small. That's the model. Okay. Um, by the way, you can take big risk. That's fine. Just make sure that um, you know your gains are going to be far greater than your losses if you take that great risk. Okay. Like if I knew that I could bet, like giving you this example, right? The odds, like the other day with the Super Bowl, by the time what team again was it? The Patriots were down really bad in the fourth quarter. There was like 6 minutes left, 5 minutes left, something like that. The odds were crazy. It was like bet $1,000 to win $31,000 if they win. I was like, that's crazy. But if I saw that they were looking strong and my gut, I can be wrong 31 times and break even and be right once or 30 times. That's a great risk to reward in something like that. You don't tend to see that in crypto anymore, but that's not the point. I'm saying risk is okay as long as you can take small risks or great risk and keep the loss small. Right? I wouldn't call that great risk then. Does that make sense? Some people was like, what's great risk? It's relative, I suppose, right? What feels risky to you? And risk managers think about it differently. They're very mathematical and methodical. I'm trying to be kind of all over the place for anyone that's on this call. But for the way that I think about risk is like this. For me, it would feel risky as hell to toss 100% of my account into something, right? But like, and then I'd have to reduce my potential loss to like 8% max, right? Lose 8% of that. And then like I would hope that I could stand to at least double, triple my account minimum if I'm putting in the entire account behind it. To me, that feels risky though. So you have to figure out what works for you and what risk is. Now in this situation, look at this, right? All-time high came in somewhere right around here, 69. Already we broke down below it and I'm pretty confident we're not at the bottom of the bear. So in the past, this was kind of like not even your threshold. Then it became okay, anything below is going to be like crazy good opportunity. And we didn't think it was possible. This time around, it's very much possible that it could hit the 38, 35 range. And I'm not saying it will. I don't know. I'm going to watch the price closely. But who says that these lows can't be taken out at 55? You know, we got a lot more support here between 40 to like 35, to be honest. So it is possible we do that. And then, over time, as you can see these trends do, right, they tend to fan out. In the early stages, you always stand to make the most money. You also take on the most risk, right? Nobody knew Bitcoin would still be around in 2026 when they were buying it in 2013. Nobody knew it was going to be a multi-trillion dollar market cap at some point in time. If they did, believe me, they would own the entire supply that they could. That's the point. Some person with enough money could do it, but nobody knew. And nor will you ever, right? Which is like, that's okay. You just have to play the game, right? The way it's meant to be played here, and manage your risk well. So I hope you've been enjoying and learning from this video so far. And if the last few months have made you feel frustrated because this crypto journey hasn't been as simple as you thought it'd be, maybe you're buying tops, panic selling bottoms, getting chopped to pieces by fake outs in the market, well, you're not alone. That's what this market is designed to do. Punish emotion and reward structure. Now, here's the problem. Most people are relying on vibes, Twitter, YouTube, and hopium. They have no rules, no risk cap, no playbook for entries and exits. So one bad trade turns into revenge trading, and then the account bleeds out or gets blown out. That's why we created the accelerator program. This isn't just signals, it's not hype, it's a system, a step-by-step framework where we hold your hand to teach you how to analyze the market, choose setups and cryptos with proven strategies to execute when you get a clear validation that you can see and feel and understand. So not only do you manage your risk, but you can survive the volatility, stay in the game, and actually profit in this market. Now, I understand many of you might not have the time to be 100% committed to crypto. Everyone's busy, which is why we built it for busy people. This blueprint would require between 30 minutes to 45 minutes of your time 2 to 4 times per week, depending on your commitment level, to actually help you see results. So if you're planning to sit in crypto, we show you a proven framework for how to manage downside, protect your capital, and position intelligently in each crypto. And if you'd rather park your money in stable coins in this moment in time, we teach you how to put those stable coins to work using our yield and liquidity frameworks. So if you've been sitting on the sidelines just watching time pass on by, the time is going to pass anyways. You might as well be making money from it. The point is simple. Whether you're holding coins or stables doesn't actually matter. You should have a plan that helps you produce results and earn income on them without needing a perfect bull run. We call this our all market blueprint. And you don't have to take my word for it. You can even go ahead and check out for yourself by going to Google and typing altcoin pro reviews. And one of the largest review platforms, Trustpilot, shows that we have 4.5 stars, the majority of them being 5 stars. And go ahead and click through and scroll through those reviews, where it'll even show that these people are clients of ours, where we did not send them directly to this link, as this website even shows you an unprompted review. For example, Pavel shared he's very impressed with the accelerator program, while another one of our students shared, I've 5x'd my portfolio with all of the coaching and tools since May of last year. Even Grania shared that the level of knowledge, professionalism, and team engagement is highly impressive, far beyond anything they could have anticipated, and that they've learned more in crypto in 2 months than the last several years combined. But don't just believe my word for it. Go ahead and check it out for yourself by clicking on that very first link in the description or the pinned comment below, where you'll land on a page that looks like this. Go ahead and watch the video, and when you're ready, be sure to apply, because spots are limited and the application window can close without warning. We've already had people reach out saying there are no more available slots to get the blueprint, and so every now and then we have a cancellation. So if you can't apply when you click on this link, be sure to check back in 24 hours and you might have a slot available. But with that said, let's get back into the video. Now, that said, I am seeing something interesting, right? We've had 1, 2, 3, 4, 5 straight weeks of sell pressure. In the past, in bear markets, if we're looking at this, more often than not, we'd see a week or two, or excuse me, a month, not a week, a month or two, where we'd get a bit of a support and a rally back to the upside. All right, we had 3 months, 2 months up, 3 months down, 1 month up. Look at this. This is interesting, right? 5 months down in a row. We could get a bit of support here, considering we have a lot of support here at the 65 range. It might be a while before we actually continue breaking down from a monthly perspective. This might actually be a pretty good support. This could be the bottom of our bear market too. So as notice, I need to be malleable. I am being malleable here. I'm not saying it's over. I'm not saying we're in a new, environment. If it is the bottom of a bear, it's going to need time. That's the reality. What makes me nervous is just looking at the stock market where it's at in terms of highs and looking at the deviation between crypto and it at local and new lows. So for me, I think, and believe me, I know this, when the stock market sells off, crypto's selling harder. That is just currently a fact. It's not an opinion, it is a fact. You can watch both closely if you want. I look at enough charts that's just reality. As much as I wish it wasn't, it is. Which means if the stock market sells off hard from here at some point in the near future, unemployment starts to continue to rise, right? They can't get inflation under control. Maybe Kevin Warsh, the new Fed chair, is a little bit more, hawkish than everyone wanted. Whatever the case might be, we don't know. But what I do know is if the stock market starts to sell off, and based on the volatility, it just looks like it's losing its steam, then yeah, this thing is going to continue declining. So it's possible we get a month or two of support, and start to sell off sometime, into April, May, June, whatever. Um, that said, I am seeing some similarities, and this is kind of what I wanted to cover. And then we can cover a few of your guys' questions, and maybe we'll have time for an indicator or like looking at the fib. So I thought this would take a little bit less time, but let's look at the past cycle. Okay. And again, I like looking at this not because I think it's going to play out exactly the same, but it's got a lot of similarities right now. So the first thing we see here, okay, is all-time high. Let's just go to like 3-day time frame. Daily's fine because then I get a little bit more granular. Okay. Technical high, all-time high. Okay. Little nice like retrace breakdown here. So what do we have here? You could argue right between here, we have a all-time high. Okay, between the ranges of 64 to $69,000. Okay, 68, 9, whatever. The market then rallied for a new all-time high for just a very short while. You actually saw it on XRP as well. Do you guys remember that? We'll show you on the chart. Okay, a lot of time between breakout for new high, and then this is where all the profit taking really started. This is where the institutional guys, the guys with all of the tokens, really wanted to start selling. Everyone's rallying and buying the FOMO. It's going to break out for new all-time highs. Every single buy order that people are tossing under the order books, they've already had set aside to sell to those people. That's why the market dumps. There's just more supply than there is demand. Okay. Here, market breaks down at 69. And what happens? Nasty breakdown. You'll notice we broke from a high of 69 down to 52%. Okay? That's a nasty dump. Pretty straightforward. Very nat. And look at this. This is what's even more interesting. Back in this market, I don't know if you guys remember, December 4th was almost like an October 10th. Did you see that? A major deleveraging. Let's look at the volume. Interesting. Okay. Then what happened? After we started cooling off and we started putting in, a bit of a base, okay? Our base being somewhere around here. Okay. What occurred? We struggled to rally for new highs. Once, twice. What do we get? A third little breakout. Okay, third high into a breakout. Bull trap immediately sold back off into for the next breakdown. How long did this stage or period occur? From the local low here to the breakdown. 107 days with a bull trap. They just love trapping people. I think crypto people are just that gullible, or I don't know. I'm not saying I'm not trashing gold. I'm a crypto person. It's not that. It's just I do believe that there's a lot. The majority of crypto investors or people who believe in crypto are not boomers. They're not older people. They are younger retail investors. Gen X and Gen Z are going to be holding that back. So they're just easier to trap, in all fairness. They don't have enough experience in the game. The stock market's a bit more sophisticated than the average crypto market and crypto investor. So it's easier for them to play these moves. Okay. Which is why people get trapped all the time and FOMO into these things, not knowing better, thinking, oh, it's here now. It has to happen, right? It's just not, that's not what occurs. So then we break down even further for a new low. And this is kind of where we're at. You're going to start to see the similarity here. Look at the breakdown here. Look at this base that we built after an October 10th, right? Bull trap, high, nasty breakdown, long base, bull trap high, nasty breakdown, right here, actually. Okay. Base. Okay. 107 days. I'm not looking at the days as much. I just want you guys to see the similarity now. Okay. Breakout, all time high. Do you guys see that? Nasty breakdown, deleveraging. Okay. So this whole thing, I'd say, is the breakdown right to here. That's the first major move. Let me remove all the other drawings, actually. That line right there. Bull trap, base. Do you guys see how similar this looks? First major move to the downside, new higher lows, right? Support maybe like in this range here between, 84, 83, right? Struggling multiple times to break for new highs, finally does. Guys, it's like, are they really like who's they? I don't know. This is just how the market is. Yeah, I actually believe that there are a few players that can get the market to pump this high, then they start selling because they don't want to carry the risk. But to say they're always planning everything, no, this is just the natural. It's like saying, well, why does the ocean have its currents? It just does. Like it's the way things are set up, human nature combined. Why does the beehive look the way it does? Like I don't know, but hear me out. Bull trap high, nasty breakdown. Now, what are we seeing on the daily? New low, possible we come back into this range, continue ranging for a little while, very weak. But notice this isn't even yes, it's a dip buy. Okay, we played it. If you watch the call that I made this week, right? We played it well. I've been out now. The longer it takes to, the longer my position takes to get into that profit of that upper range, the less likely I want to hold it. So side note, yeah, like I'm not waiting for 78 anymore. I've made my money. I'm out. Okay. Um, Notice that look, this bullish candle is an inside candle to this bearish candle here. Okay. Although we're not getting a bearish engulfing right the day after, bull trap, major breakdown. And here's what's interesting. When the weakness comes and really steps in, it lasts a shorter while. Here we had the breakdown, and you'll notice, let's go here. This was like a 30-day period before a break for a new low. Some people are waiting for a retest that doesn't come for a long period of time to get out of a position, to short the market. I don't wait. There's no reason to wait. Just good risk management will save you. Okay. Right here was your breakdown. But this was a very short period of time where we struggled to get back into new high territory. I'm not saying something like this will occur again. I don't know. But if we did and we had something similar, okay, and let's just say off of the midline of these candles here to that low, we still have a 47, 48% dump. The only thing that I'm noticing here, though, and here's the difference. Let's remove those drawings. Let's put a line there. You guys want to know something majorly different about 2022 to now, which is actually kind of like a whoa type thing that we really got to pay attention to. And it might be possible that crypto is decoupled completely from the stock market, but that's not fully true because they wouldn't both dump in unison, right? When the stock market dumps. That crypto is just experiencing its own separate bear market and then continues rallying with the stock market. But I don't think that's it's going to happen forever, especially not into the summer. It'd be extremely rare. Look at this right here. Look at where the stock market was in that same period of time. Already printing new lows, already put in its all-time high and experienced this bear market. You guys remember when the Biden administration during that time was like, I would assume Trump would be in the same boat. He's like, oh, we don't have a bear market. We're the best in the world, even though the market's dumping for lows or whatever. He's very positive, his economy and all that stuff. Right? Remember when they changed the definition of what was it again? A bear market? You guys remember that? That was kind of funny. I'm like, are you serious? Like, no, we've had two negative quarters of GDP, right? Or negative GDP growth, and we've done more than 20%. That's a bear market. Well, it never came, right? But this was printing new lows, and that's what scares me because they were trading very correlated in this respect. Very similarly, look, the rally here, rally on the stock market, dump here, dump in the crypto, right? What's different about this one? Crypto's already leading it. And the stock market, although I will say QQQ is looking weaker than the S&P, and probably honestly, again, because it's been a leading index, right? It's led the market for so long. Now that it's starting to lag, what you see in bear markets more often than not is the leaders of a market, they make all of their highs early phases, early in the market. And then into the middle, into the late stages of the market, they start to top off and start to break down. And while the leaders of the entire market are starting to break down, money rotates into the laggards. You see this with the altcoin market too. The money starts to rotate into the laggards like the Russell 2000 and now the Dow Jones, right? Like big things, by the way. These are huge markets, but that's not the point. They've been laggards. Most of the money now, right, rotates into those. Those start to pump and people FOMO into those, and then they start to break down while this thing's already breaking down and giving you a signal. We're getting close. So notice, look at the volatility. Again, similar fashion to the S&P and struggled twice to break for new highs. A break from here now below this $600 is going to be pretty nasty for this market. And because this breakdown is likely going to carry over into the crypto market, I actually do believe we could go lower than people are thinking at 50 something. Pretty straightforward, which would be good opportunities to consistently dollar cost average into for a long-term investment. But as things stand, I'm not buying risk here, especially with how similar this is beginning to look to the past cycles. So let me go back to my normal chart here, right? Are you guys catching this? Like it's kind of shocking. And if this were to last 30 days, I mean, we're going into March. 30, hell, even 45 days, 60 days, still March to April before another breakdown into May. I don't see a situation where this thing turns around anytime soon. And if that were to occur, I'd be more bullish back above the 85, 88 range. And that's okay. Guys, most people were like begging for an 88K Bitcoin when it was chilling at 110, 108. I'll buy under 100. I'll buy at 90. Oh man, that's a steal because it's going to go to a million. I don't disagree. Someday it might go to a million, right? But like now play it well. Like to me, that looks more like a shorting opportunity. Um, and to combine that, I've already confirmed, and this is the reality, and take it or leave it. Notice right here we had lows right here. This is a confirmed bear market now. You usually know a little too late. Most people, again, you're going to start hearing about it at the very bottom. We're in a bear market. That's when you should be buying and accumulating. Move that out of the way. Higher high, higher low. This breakdown here now completely just took out not only this prior low, but even the past low. So this is a confirmed bear market, period. Because now we have a series of what? Lower lows, lower highs. So whether the bear market is very short-lived and this is just completely deviated away from the stock market completely as a risk-on asset class that's in a league of its own, which I kind of doubt right now, just based on how it's trading, and based on the fact that Bitcoin did not move with gold at all. The narrative does not seem to stick yet. It may never, I don't know. Here's what I do know is that this pattern right here, these lower lows now confirm bear. This is no longer a bull market. It is officially a bear market for Bitcoin and crypto. And that is okay. There's money to be made. Like you can make money. This is the beauty about markets. You can make money on the upside and the downside. Period. That's what's exciting. Everyone's worried. And it's like, why? Like you can make money. Like I actually I kind of like bear markets personally because not only do I get to accumulate more of that crypto that I want by dollar cost averaging for my long-term investment, but like shorting, you make more money fast. Longing sometimes takes a while. Maybe not as much in crypto, but there's, this old phrase, it's like markets tend to take the staircase up and the elevator down. Like when they dump fast, and you can make some money quickly. Um, on volatility, you can make money. This is why traders love vol. That said, also, just looking at like the 40 week, by the way. This has been a pretty good range to buy dips or retraces into a bull market. But whenever I start to see this thing kind of stall out and flip over, even if you get a bit of a retrace, this deviation is not bad to buy. We'll figure it out here in a bit, but I'm not buying a bunch of dips right now. I'm more so focused on the fact that this thing has been in a consistent uptrend. Do you see the trend on the SMA? Now it's flattened out and now it's starting to curve over. It's kind of like it's like keeling over. It's ready to take a little bit of a nap, if you will. So whenever I see this directional change in the trend, I tend to be more prone to sell and want to stay away. And just with how deep we are and deviated away from it, yeah, not looking too hot for Bitcoin or the crypto market. I don't know what else I got. I know that I have the 50 EMA on there. I'm gonna look at that real quick. Good range of resistance to sell into potentially, right? Anytime we come back up into there. So if for whatever reason we were able to retrace back up to 84, 85, that's an area where I'd be more interested. You're likely going to get another couple of analysis calls before that time comes, unless we get just a crazy V-shaped recovery. Me personally, I think this is the biggest extent of a V-shaped recovery we're going to get for a short while. Like this nasty dump from 78 down to 50, 59, 60, all the way up to 72. That's a nice range for a V. Um, and the reality is, if we started to get a bull market, there's no reason to FOMO. Okay, if this was really the bottom, we usually have time to find out, just like you would have back here. There's always time. Someone's pissed off that they didn't buy at 16 or whatever, right? When in reality, you'd be pissed off far into the future that you didn't buy at 20. So you just got to give it time because there's a possibility this thing continues to break down even further. And so I just, you'll have time, is my point. You don't need to worry about a new cycle just yet. At least I'm not. Doesn't mean you don't have to. I'm not. We are at a major range of support here, though. So I don't know how long we could hold this range. I don't know if this is the local bottom, but this pattern here and what I'm seeing and just how high the stock market is leads me to believe I need to be very, very like risk adverse. I need to be very cautious. And I'm not liking the fact that it looks so eerily similar to what we saw here. And there was another 40 some percent dump. And if this cycle was weaker than the last, and already we're retracing and breaking down pretty heavily relative to the prior cycle, a 47% move from here, right? Look, still takes us to 32. Again, I'm not saying that's going to happen. I don't know where we're going to go. I'm not, I don't know the future, but that's kind of where I'm at. So, that said, I think everything will follow. Almost every crypto is going to follow that. Let's go ahead and answer a few questions. I know it took a little longer than I expected. I did not expect the call to do that. Let's do this. Okay, making a long or short play. How do you utilize the swing failure pattern? I think I don't understand that question that well. Swing failure pattern. You might need to expand on that just a little bit. I can make up an idea, but you have to be more clear. What are some things you look out for when the price is wicking into areas of support and resistances? I seem to struggle with guessing whether the trend is going to continue or reverse. My best advice on something like that, Joe, is to like stick with the trend. The trend is your friend. So like maybe zoom out to a larger time frame, right? And you might have a big old wick into a range. And if it's at a range, right, and you haven't taken a position, wait until the next day or two closes to see how is it acting. Like, is it still coughing up blood, right? Or is it like kind of retracing and acting nice? Do we see a lot of volume stepping in right there? And if so, okay, it seems like a nice little area to enter a position. When you take that position, be confident in your direction of the trade. Like you should hold strong conviction loosely, which means I'm very confident that it's going to go up from here when I enter. And if it doesn't, here is where I am wrong, which means you have your stop loss set. Okay. I don't walk away from my charts unless I have a stop loss. And only because all of my stuff is on my actual home base computer. And so if I'm out and about and I can't place a DeFi trade on my phone and like the market's moving against me, I'm really screwed. So I always have a stop. If I can't place my trade on my phone, I always have a stop. And even then, it's dangerous. You might be busy. You might be doing something, right? You might be on your date, whatever the case may be. So, really important that that's the case. But I tend to bet with the trend. Study charts daily and for hours. Sure. That's always fun. You know what's funny is I look at charts probably a little bit less than I used to. Um, but I do look at them religiously, right? So, and once, in order to learn something, you should look at it a lot. Best book to read, in your opinion, on learning charts, shorting slash long. I don't know about shorting and long necessarily, Tom. My personal favorite books to read, my top three are Market Wizards, the original one written in like 1987 by Jack D. Schwager. And then Reminiscences of a Stock Operator. I think that's once every year to 2 years. Like if you read that, your head is going to be on right. It's probably one of the best books I've ever read on understanding markets. And it's an old book. It was written about a guy named Jesse Livermore, who was considerably one of the best traders in history. And his life and how he used to run the bucket shops. And the things you learn in there are just truly timeless. And then I think my third that I would say, if you really want to understand better, and then all the other stuff is more your how-tos, right? There's actually a lot of great books. I really like this one as well. How I Made My First $2 Million in the Stock Market. I think that one is phenomenal. Truly, it's a really good one. So, how far back do you go to chart lows and highs to see a pattern into today's time, where you make a play? It really depends, right? If it took like, it's pretty straightforward. And I don't want to spend too much time on this, but look, what were the last all-time highs here? Where's the new all-time high here? If we come back into this range over here, right? Doesn't that look like it could be a potential support? Well, someone's gonna be like, well, you shouldn't think about 2021. But the reality is you should. Someone got in there. To someone, that price was important. And because it is, like for them, if they see the price below there, are they more apt to want to sell or buy? Right? You don't know. But what I do know is I look at all time frames. And so I think it just comes down to, where you're trading. Like here, right? 2021, like in this range here, 2021 highs and lows aren't going to matter that much. Well, first and foremost, it never went there, right? In 2021. But like I think just it requires discernment, right? And just practicing it and seeing what happens over time. I think that's the best answer I can give you right now. Crypto is definitely harder to trade for me. A lot of fake outs and it'll turn on a dime. Stocks seem to be easier to read. That's probably true for most people, as long as they're bigger stocks that trade, many, many millions of shares. I would say 500,000 to a million shares per day probably is your best bet on that. Um, and that's from, some stock traders that I've learned from that like trade size. They're like, I don't touch anything that's under like 500K to a million shares per day. But that's what volume is, right? If it's not trading on average, that's an average, which means it could be a little bit low, it could be really high, just on average. Would you short now or wait? I'm personally waiting. XRP looks exactly like Bitcoin. Not much else to look at there other than the fact that when it breaks down, it's going to break down. It's holding up okay right here, right at 140, which if you really look at it, where does that go back to? Prior cycles, 135 to 140 in this range here. See that? But like trend is down and it has an insane amount of overhead resistance. So this is something that I'm like, you have time. If you're trying to accumulate this, great. But it's got to break out above that 185 minimum to $2 range in order for me to even want to think it's going to be in a new market environment. And that can happen. We've seen it. But look at how much time it's spent down here. Like, I don't want to spend this much time waiting for something. That's an opportunity cost for me. I'd rather have access to my actual capital. So unless you're dollar cost averaging through a range, that's very different than like, I'm going to buy now and wait for it to break out instead of having access to that capital to put to work for you. Me personally, I think this thing's likely going to go lower before it goes higher. But that's only because I just gave you my analysis on the entire market. And as we've seen, XRP seems to be following Bitcoin quite well. One of the major differences is off that high, and look at this perfect little textbook bull trap to the low with 69% dump, currently at 62% down. Okay, and this is the beauty of market caps. The market cap doesn't matter; it's total BS. It's just the size of the market. If everyone theoretically tried to take all their money out, it doesn't actually work that way based on liquidity. But it's harder to sell Bitcoin down to the same ranges because it's a bigger market. 45% down though for a 1 point whatever trillion dollar market is a lot, which means yikes. Like this thing is still not liquid enough. Okay? 45% down. So, that's something to think about. All right, guys, thanks so much for hanging out, watching the video with me or if you're watching the replay, I appreciate you. And we will see you guys on next week's call. Have a good one. And so it looks like we're actually going to be experiencing new lower lows in the market, which is totally fine. Amateurs wait for crypto to go up in order to make money, but professionals make money in all markets, which is why you should take advantage of this blueprint.
Liquidity pools are the Airbnb of crypto. Your altcoins aren't an investment until they pay you rent. So let me explain liquidity pools in a way that makes sense without all the complicated crypto terminology. So imagine you own a rental property worth 6 figures. You know it'll appreciate over time, so you hold it. But instead of renting it out, you leave it empty and hope that the value goes up. Meanwhile, someone else owns a property worth the exact same amount in the exact same neighborhood, and they collect rent every single month. Same asset, completely different strategy. Well, that's exactly how most people treat crypto. They take their Bitcoin, Ethereum, XRP, and they just let it sit there idle in a wallet or on an exchange like Coinbase, doing nothing while they wait for the price to go up. And smart money doesn't wait. They put those same assets into liquidity pools where traders pay fees every single time that they use them. It's like renting your property by the hour instead of by the night. And liquidity pools are basically shared vaults of crypto where traders use those vaults to buy and sell instantly. Every single trade pays a small fee to the liquidity provider or the landlord. So basically you're becoming a crypto lord. Those trading fees don't go to an exchange. It gets split between the people like you who supply the crypto. And here's how the math pencils out. Let's say a liquidity pool holds about $8 million in assets and sees roughly $4 to $6 million in trading volume per day. Most pools charge around 0.3% per trade. So that means the pool generates around $18,000 per day in fees. And now let's say you supplied about $60,000 to that pool. Well, that's less than 1% of the total liquidity. Your share of those fees can land around $40 to $70 per day, depending on the volume. So that's roughly $1,200 to $2,000 per month while still holding the same crypto, or $14,000 to $20,000 per year. And if the price of XRP, Bitcoin, Ethereum, or whatever altcoin you're holding in that pool pumps, well, you win. If the price stalls and goes sideways, you still collect fees. And if the price dips, well, the fees still keep coming in from traders selling that asset. So it's a hedge against volatility. And this strategy is the Airbnb of crypto because it allows you to collect rent on your idle coins. This is how serious investors turn their crypto in their wallets that are doing nothing into a compounding passive income engine. And I broke this down in a quick video showing you how to do this safely, which pools actually make sense, and who this strategy is really for. So if you've got $50,000 or more in crypto, it's time to become a crypto landlord. Click the link below this video to get the entire passive income blueprint right now.